This is Parker Couch with Homestar Financial, and in this video, I'm going to share how you can use the equity in your existing home to purchase another home. You may be thinking now is a great time to buy a second home or investment property, and having enough money for a down payment on a new home is often one of the biggest struggles homeowners face. Many people don't want to tap into their 401k or cash right now, but you may be wondering if it's possible to tap into the equity you have in your existing house. For some homeowners, you may be able to leverage the equity you have built up in your existing home to buy another property. There are a few options for using your equity in your house, and you always want to consult your accountant to find out any tax implications. But let's look at some options you may have to tap into the equity of your existing home. You could refinance your existing property. In this first option, you might want to consider to refinance your existing home with a cash-out refi home loan. A cash-out refi allows you to tap into the equity in your home and take cash out. This cash can be used to remodel your home, pay off bills, or put your kids through college. It could also be used as a down payment on another property. There's often seasoning requirements on your down payment funds when you buy a new home, so you'll want to check with your mortgage lender, like me, on the requirements. But refinancing your existing property may allow you to tap into your equity and use it for a down payment on another home. Interest rates on primary residences are usually lower than on investment homes. And with the cash-out refi, your total loan amount typically cannot exceed 80% of your home's value. The other option is you can take out a second mortgage. Another way to tap into your equity is to take out a second mortgage. And there are many second mortgage options available, including a home equity line of credit or HELOC. A HELOC works like a line of credit against your home. You do not have to draw all the funds out with the HELOC home loan, and it may provide you with the funds needed to buy a home as a rental or even consider buying a home and fixing it up to sell. There are seasoning requirements for a down payment, so you will want to plan ahead and work with your mortgage lender to find out specific requirements. But you got to understand the downside. When you use your existing home equity to finance a second home, you do stand to lose your primary home if you fall behind on loan payments. Equity lines of credit usually have variable interest rates, which means your payments could skyrocket over the course of time. Home equity loans tend to have shorter terms than standard mortgages, which means you may have a larger monthly payment to manage. If your payments fall well within your budget, then a cash-out refi or an equity line may make sense. But if funds are tight, then the cons may outweigh the pros. Whatever you decide, though, be sure you're working with your accountant, your financial advisor, and of course, a licensed mortgage professional like me. You may be sitting on an opportunity to expand your home ownership with the equity in your existing home. Thanks so much for watching. This is Parker Couch with Homestar Financial. You can connect with me at 770-540-4936 or parker.couch@homestarfc.com.